Hello, I'm Simon Lambert of This Is Money. 2024 was a good year for investors, with global stock markets riding high, led by the US once again. But with President Trump due to take over in the US and the threat of trade tariffs, continuing geopolitical strife, and concerns over concentrations in stock markets, investors know that 2025 won't be all plain sailing. To help them navigate their way through, Hargreaves Lansdown has compiled its 5 funds for 2025. I'm here with Joe Hill of Hargreaves Lansdown, who's going to talk us through some of them. So first of all, the bond market. It's not one that all investors focus on, but one of the funds in your picks is a bond fund. Tell us about it.
Yeah, absolutely. So we think 2025 could be a volatile one for investors with lots of risks to grapple with. But one area we are positive on is fixed income. So we think it offers the potential for income now and the potential for capital gains as yields come down. One risk I would caution, though, is we do see some upside risks to inflation. So we would caution investors to moderate their interest rate expectation.
So you've chosen Invesco Tactical Bond. What is it that makes that fund stand out?
Yeah, so in this part of the market, we think it's important to be active. And this fund offers the opportunity for 2 experienced investment managers to manage the credit and the duration risk for you. The fund is run pretty conservatively. It tends to invest across the fixed income spectrum, but really comes into its own in volatile markets, and in the past has shown good downside protection when markets are fallen. On the flip side, it doesn't always keep up in a strongly rising market, but we think as part of a broader portfolio, it could work well for investors.
Now, one of the main areas of focus is going to be the US, again, for investors, and there's a big event coming, President Trump 2.0, and one of his major policies has been trade tariffs, or the threat of trade tariffs. Large cap US stocks have been doing very well, but you've chosen a US smaller companies fund, Artemis US Smaller Companies. What's the idea behind that?
Absolutely, and as you say, Trump's election's been impossible to miss. It's been the big news, and we think there are a number of policy tailwinds that are coming through already that could benefit US smaller companies. One of those is the proposed cuts to corporate taxes, and we think you would expect that to have a positive impact on company earnings and share prices as well as a result. And as you mentioned, tariffs, that's been a key part of his election campaign. The proposed 20% tariff across the board with potential for higher tariffs on certain countries, China being an important one there. And who benefits from that? Well, it's the companies that are plugged into domestic America. 80% of US smaller companies' earnings are from within America compared to 60% for their larger counterparts. So they're clear beneficiaries of that. Valuations are also attractive. So smaller companies are trading at a 20% discount to their larger counterparts. So we think there's some interesting value there. But importantly, in this region, we think you need to go active. So 40% of the Russell 2000 index, which is comprised of US smaller companies, are actually loss-making. So we think this fund, managed by the experienced Cormac Weldon and Olivia Micklem, offer investors the opportunity to plug into that domestic America theme with the benefit of great stock picking.
And you said earlier that you think 2025 could be a volatile year for investors. One of the other funds in the 5 funds is a more defensive option, Trojan. That's an interesting fund because it combines a number of different things, doesn't it, including some gold. What makes it stand out for you?
So the Trojan Fund invests in shares, bonds, gold and cash. And as you say, gold is an important part of the investment approach within this fund. Gold has performed really well for some investors, and we think the chances of significant gains from here are limited, but we do think there are a number of attractive properties that it can offer investors. It's got that perceived safe haven status.
And with the other parts of the fund, the bits that are invested in shares and bonds, how do the managers invest there? Is that also defensive?
It is, yeah. That's a consistent approach across the portfolio. So the majority is invested in fixed income across bond markets, largely in government bonds. And on the equity side, there's a high quality threshold. And with that fund in particular, it's got quite a defensive approach. It's cautiously managed. So the gold theme really plays into that kind of broader portfolio approach at Troy.
Okay. Joe, thank you very much. And thank you very much for watching. Goodbye.